Welcome, my friends. Welcome to a terrific Thursday today. We're having a good day today. I'm looking at gold here. We were talking about this yesterday. And, when we were looking at it, it was right here. Okay? And I was just mentioning, if it kind of holds this 25.89 area, this might look like it would want to start taking some of these gentlemen's money up here if it held, because it kind of stopped bleeding out, so to speak, and it had a little pause in price action. And then we go through the rest of the day, all day Wednesday. It starts, you see a lot of green candles, but it's not really going anywhere. And then you get to the Asian session. And what did Asia do? Asia loves to play with you. So you're going sideways yesterday. Okay, you're holding the level. So there's no reason to be closing a long position, so to speak. And then this happened probably around the Asian session last night. You had a little pullback here and one last tease, and then boom, you drop down. So when you saw that 25.89 got taken out on that scalp, okay, that's when I'm getting out, because I say, okay, my idea is, not valid. We didn't hold the level. We kind of paused. We had some consolidation here all day Wednesday. So when it comes to trading like that, it gets to just be a 50-50, okay? Either you're going to break out of the consolidation up or down. And once we saw in the Asian session that it broke down, we just get out. No big deal. We're not trading heavy, so we never lose a lot. So we let the markets do its thing, and sure enough, it had one of these nice, during the Euro session, it just bleeded out, So that's why it's good to get out when your idea is not right. Because if you had held on to this trade, I got to clear this up a little bit. This is a perfect example I'm putting out here. All right. You entered here, okay? You're expecting price to reverse because it's kind of making some bullish maneuvers and it's holding a level here, okay? So when it breaks your level, you get out at a loss. No big deal. Not that big of a loss. But the reason you need to be quick to get out is because what if you just do what so many other people do? They hope. They hold and hope. Hold and hope. Hold and hope. So you entered up here and you're holding it. It goes down, down, down. Euro session, it just keeps going down. Little wick up, down. I mean, it just keeps going down. At what point are you willing to say, okay, especially if you're scalping, at what point are you willing to say, okay, my idea's wrong? Down here? This is like way down here. Why are you holding it that far down? When it broke your level, you should have got out and wait for another opportunity. This honestly is ugly price right here. This is ugly price action. This tends to be called right here, when price does this is like a V-shaped recovery, they call it. It's garbage. It's ugly, it's garbage, and it's just meant to grab liquidity. That's all it is. Quick move down, quick move up. The reason I don't like these V-shaped plays is the V shape. It's not enough data for you, or for me personally, to make an indication of, okay, I'm going to go ahead and enter here. Because if you think about it, every time you enter a V and you enter right here thinking, okay, now we're reversing, we're going to go back up. What does price do? It drops down and rips against you. It's difficult for me personally to identify these V plays. That's why I don't like them myself. I like plays that come down and then dance around a little bit and then go up. You know, I don't like the bam, bam. How am I going to make money on that? I'm not. You know, I'm not. You might be excellent at identifying V plays, but personally, I do not. I have not mastered that skill. So, and see, now it's interesting because gold, it dropped down to 25.36. Mind you, this is so zoomed in, my friends. This is like on the hourly, okay? Yesterday's scalp idea, that was just like a day trade, so to speak. It's not a swing trade by any means. When you look at the daily looks gorgeous, okay, for a little move up. Why? Because as I was saying yesterday, the opportunity's still there. Even though in a macro zoomed out perspective, you're really high on gold, okay? Everybody else is thinking that. So they're convinced that they're shorting the top. And that just gives nothing but a little opportunity to take some more money. Don't be surprised if in a couple weeks from now, gold breaks at 27.90. Right now, personally, the more I'm looking at this daily, I'm probably going to be entering a position on gold, having my stop way down here at 24.70 and my take profit up here at 27.90 in the anticipation of punishing everybody who thinks they're shorting the top. This was only the first leg down. It doesn't mean jack diddly squat. Price can do whatever it wants to do. And the fact that they're moving down so quickly seems like they want, it gives the inclination of when it's going somewhere quickly, that means they want to hurry up and get there and leave. Okay? It's the slow move that tricks you. Okay? The quick move, you know, they're just trying to hurry up and get somewhere, take some money, and run. The slow move is the one that keeps playing with you, because it slowly goes up, and then you're waiting for a good entry, and it doesn't give you a good entry. And next thing you know, you've missed your opportunity, and gold's ripped up. So that's kind of an interesting little tidbit. I wanted to look at Five Below. Send me a comment on things you like to look at. I'm generally looking at the things that I have positions in and the things that I'm interested in when I talk about things. But, you know, if you want me to look at something, just send me a comment. Say, hey, man, what's your crazy brain think about this? Not that I'm giving advice. I just like talking about charts. That's what I like to do. I love investing. I love trading. I love having fun. By no means am I a professional. By no means do I even know what the heck I'm doing. We're just having fun talking about the way price moves sometimes, because we like to watch price action. Why do you think I don't have any indicators on my chart? I don't use indicators. I never will. I'm done. That's all in the past. Pure price is the only thing that cannot lie to me. Right now, Five Below, it's $86.94. That's it. It's not lying to me. That's the price of gold. That's the price of Five Below right now. 86.96. It's not lying to me. We're still looking good. This is just a little cooling off consolidation here. This weekly idea we have for Five Below is a thing of beauty. We're still way up in the money on this. This is looking to be one of the better investments I've ever made. Purchasing Five Below at $73. And we're going to be dumping it off at 140, 150, 160. This is going to be an absolute thing of beauty. To me, personally, being patient, long term, this is an easy 100% trade. Easy double your money, you know. This is just me personally, you know. This is easy. I put 1,000 in this region, and I'll cash out when it gets up to 140, 150, 145. I'm done. I'm not looking for it to break that 200 level. Okay? So Five Below is looking beautiful. I was really looking at Pepsi earlier. Curious how Nvidia is doing. We haven't looked at Nvidia in a while. Oh, sky high. Sky high. Nvidia is like the investment of the decade. It's gorgeous. I have no position in Nvidia at the moment, but I've been eyeballing a possible short entry here. Definitely not today. That's looking like it's going to break the 149 today. So I'd be more eyeing something in the 160, 153, 152, 157, 160. That'll be kind of where I'll be positioning my shorts, you know. The randomness factor. That's something else I should make a video about, how I view the market, and it's the randomness of the market. The more I'm convinced of the randomness of the market, the better I do. Okay? It's when I personally tend to be so logical and tactical and efficient in the marketplace. It's when the market just does things that don't make sense to me. And the more I tend to just be fluid and adaptable and appreciate the randomness of where price ends up, I realize that, oh, okay, yeah, yeah, let's go ahead and do that. And then it works out, you know. Very, certain people, they swear by things like the Fibonacci and all these other measurings to look at price, but more and more and more and more I see, sure, it respects those kinds of things every so often, but it's not constant. It's not all the time, you know. It's very random at times. And that's why we love the market, because it's an ever-evolving beast of randomness and chaos. Hope everybody has a wonderful Thursday day. And we will talk to everybody later. Peace.